the black upstart.
Black people's $1.3 trillion.
It's the black upstart.
We're spending it making our own communities and our own businesses rich. Now let's move on to investing, all right? Let's move. Oh, it's 831 people up in here. Hey, y'all. Shoot, last time I looked up there, it was like 500. Welcome. All right, let's talk about new investors, all right? Let's talk about investing, period. If you have $600, how can you flip that and increase that? Now, again, the whole purpose of this live is for you to understand how to apply this money moving into the rest of the 2021 year. It's not enough to just say give broad stroke advice, right? Broad stroke advice was, oh, everyone should be an investor. Yes, I do believe you should invest with the expectation of return. Oh, everybody should own a business. No, well, let's talk about, is it an LLC? Is it sole proprietor? What type of business should you start? How can you start a business when you have access to capital issue, right? So with investing, we're going to be very specific about how investing looks in 2021. And the first thing I want to talk about is the sectors that are expected to perform well moving into this next administration, all right? So the first thing I want to talk about is the top 4 sectors that are expected to do well under a Biden-Harris administration. First is energy, and that's so different because in 2020, energy was not a high-performing sector at all. So when we talk about the energy sector, we're talking about things like the automobile industry, we're talking about oil, fuel, we're talking about planes. And one of the things that we know about 2020, right, is that travel was affected and impacted because a lot of individuals were staying at home. Shout out to the essential employees who didn't have that privilege and benefit. Thank you so much for your service to this country. You kept the economy, the American economy, live and open, and we appreciate you. But for those people who stayed home, right, that means that you were driving less, right? You weren't driving from home to work, right? You was waking up from your living room, doing work in your dining room. You may not have brushed your teeth, that's your business. You may not have washed your face, that's your business. I hope you lived alone though. So that you weren't driving to work. Listen, right? Less, right? Less fuel. Less fuel when you're going on vacation, YOLO in Australia, YOLO in South Africa, right? You only live once, right? You only live once, but sometimes you have a long life, so make responsible decisions, okay? But less fuel because less people were traveling by flight. You know, when it came to automobiles, we saw Tesla performing very, very well pre-2020 because people were starting to talk about clean energy. So where do we stand in 2021 when we're talking about sectors? In Biden and Harris' economic plan, they talked about how they wanted to make strategic investments in clean energy and the automobile industry. Biden and Harris have a priority to invest in those companies who are using clean energy responsibly, right? So for those of you all who have been following the roller coaster of Tesla, you know that one of the innovations they were seeking to introduce was a 100,000-mile battery. Right? 100,000-mile battery. We know that Teslas are electric cars. We know that at one point Tesla was given they were offering citizens a tax benefit for buying Tesla where you could get thousands of dollars back when you purchased the vehicle. What's happened in 2020 and going into 2021 is that a lot of other car manufacturers outside of Tesla have seen how Tesla performed, and now they're developing EVs, electric vehicles. They're figuring out how to make their batteries better, and they're trying to figure out how to introduce innovations to the market that leverage clean energy. Why am I saying this? Because if the energy sector, which is one of the 11 sectors, right, that make up the U.S. economy, right, we'll talk about that in a second. We'll talk more about that in a second. If it was low performing in 2020, and we're saying that Biden and Harris are going to take tax dollars and invest in this industry, then in 2021, 2022, 2023, 2024, we can expect a low performing industry to do better. All right? This is for those folks that were looking at the Apple, you know, the Apple memes and Apple posts on Instagram where somebody's like, I bought Apple back in $16.99. They were like, girl, you weren't even born in $16.99. I bought it in $16.99 when it was 7 cents. No, you didn't. Don't play with me. But you know those people. I bought it 10 years ago when it was just $70. Now it's trading at $100 and something, and I'm balling out of control. Look at me in my Lamborghini, right? You know, so like the whole point of what I'm trying to say, y'all, is that you want to look ahead to the future to those sectors who are expected to perform well. And what a lot of financial analysts do is they look at where government investment is going, right? Because government investment in a sector means that there are financial resources flowing there, and it's primed, right, for growth. So let's keep going. Next is healthcare. That should come as no surprise to anybody. We're in the middle of a national pandemic. We've seen that the government has committed to buying vaccine doses from Pfizer, from Moderna. We know that United Health is performing very, very well. People are having to go to the hospital. Some people are taking medical appointments from their laptop. Healthcare is expected to do well in 2021. And also, the government is expected to make investments in the healthcare industry in 2021, similar to how it did in 2020. Next is consumer cyclicals. So when we say consumer cyclicals, what we're talking about is an industry that normally performs according to the market, right? So when the market is not doing so well, these companies normally don't do so well because usually they sell discretionary objects. So these are things that you don't need, but you buy them because perhaps they make you feel good, like toilet paper. That was a joke. You should buy toilet paper and you should use it, okay? Please buy toilet paper, even if you have to throw some bows to get it, okay? But these are companies like Home Depot, you know, these are companies like fast food, like McDonald's, right? So like, again, not gonna judge you on your chicken nuggets. I talked about this on EYL. You wanna go through the drive-thru, get you a hamburger and French fries. That's your business, girl. Give the baby a chicken nugget, drink yourself some iced tea. It's your business. I ain't gonna be there, but that's your business. So we're talking about those things that people cut. TJ Maxx, Macy's, retail, right? Movie theaters, etc. We're talking about those companies that when people are looking at their budget and they're seeing that it's getting closer and closer to $0, right? That they're willing to cut this from their budget first. Well, since we don't expect to be socially distancing and quarantining for all of 2021 through to infinity, what financial analysts are doing are projecting to the future that as the economy begins to improve with stimulus number 3, maybe even potentially a stimulus number 4, that a lot of these companies are going to do well. We're going to talk about those companies in a second. And then finally, we're going to talk about financials, okay? So financials is also expected to do very well. This is the Visas, the MasterCards. These are, you could put PayPal on there. But cash is dirty. A lot of people have become really comfortable with using plastic, right? Whether it's your debit card or your credit card. But then also, as people begin to get stimulus checks, right? As the economy recovers and people go back to work, expected to have interest rates rise. Right now, interest rates are low, so banks are not making a lot of money. We're not always going to be here, all right? So yeah, someone asked me to repeat. That's energy, healthcare, consumer cyclicals. You could put consumer discretionary, and we also talked about financials. Let's keep going. Now we're going to talk about a couple of, I want you to get these down. We'll say these stock tickers really fast, okay? I want you to write down, and you might have heard this a few times, but the SPY and the VOO, all right? SPY and the VOO. So Vanguard, VOO stands for the Vanguard S&P 500 ETF Trust. And this is equivalent to you buying a piece of 500 large publicly traded companies within an index. Look at an index like a basket of stocks. In fact, look at it like a mall, right? You have a mall, you have 500 companies that own storefronts in the mall. And when you invest in a percentage of the mall, you own a percentage of every single company in it. It might not be 100%, but it might be 0.01% on Microsoft, 0.01% on Apple, 0.01% on McDonald's, 0.01% on Home Depot, 0.01% on Boeing. So I want you to imagine it like that. The S&P 500 is the best market indicator, right? That's what's called S&P 500, 500 for the 500 large publicly traded companies, okay? It's one of the top indicators of market performance. And two very popular investments for ETFs, all right? SPY, VOO. SPY is the Spider S&P 500 ETF Trust. VOO is the Vanguard, all right? I prefer Vanguard because there's a lower expense ratio. All right, so let's keep going. DIA. I want you to write down DIA. All right, so DIA is the Dow Jones Industrial Average. All right, so that tracks, the Dow Jones tracks the 30 large publicly traded companies. They're ranked based on share price. So some of the companies that are in the Dow Jones include United Health, Visa, McDonald's, Goldman Sachs, a lot of the companies in the Dow are not tech companies. So the reason why looking ahead to 2021, we're looking at DIA, right? Dow Jones Industrial Average, which is, again, an exchange-traded fund, is a basket of stocks, a collection of stocks, is because as people emerge from home, self-distancing and quarantining, people are going to go back, and they're going to go back to the daily activities that they were taking place in before the economy closed, all right? So then the last one that I'm going to give you is XLI, all right? XLI. So XLI is an ETF that tracks energy, all right? So it tracks the energy sector. We just talked about the energy sector, so if you're just coming in, you're going to have to catch this on YouTube. But for the energy ETF, right, what they're starting to do is prioritize within the energy ETF companies that have clean energy innovations and also the automotive industry, all right? So some of the companies in here are Honeywell International, Boeing, which supplies airplane parts to other airlines that you recognize like Southwest, American Airlines, Delta Airlines. Lockheed Martin is in here, and also Deere and Company. You know the little green tractor, you know, you see a little man and a little farmer's head, you know, just, ooh, be driving, child, be driving, you know, the little black farmers, they be cute, y'all, they be buff, but you know, I'm a city girl. Sometimes I go out in the country though, but I ain't gonna tell you all my business. All right, so let's keep going. So I want to map this out for you, right? $600. If you had $600 out of the three ETFs that I just shared with you, what would you do? How would this money grow over the next decade, right? Over the next year? It's XLI. So someone said it's XLI or XOY. X is in Xerox, L is in lipstick, I is in eyes. I have an accent. So I as in Indiegogo, all right? Like the Indiegogo campaign. All right. So 10 years, if you took $600, right, your $600 stimulus check, and you invested it in the SPY alone, right? So you could choose the SPY, you could choose the DIA. Let's say you put $200 in the DIA, $200 in the SPY, you put $200 in the XLI, right, the energy ETF. Let's anticipate that they perform at the same level of the SPY. The SPY is the S&P 500, and the returns for that are about 15% annually, all right? I did my math with the SPY, and I saw that for the past 5 years, on average, it's returned 13 to 19%. If you invested $600 in 2021, and you paid into that same brokerage account, into that same ETF, $100 a month for the next 10 years, math says that in 10 years, your investments would have yielded you $28,000, okay? $28,000. Now, for some of you all, you might be like, oh my gosh, that's not a lot of money. $15,000 of that $28,000 would just be interest off of your investments. The reason why investing is important and significant and why a lot of people do it is because it's your money going to work for you. It's like you going to bed and your money putting on the work boots and the wife beater, you know, putting on little Timberlands and a wife beater, putting on a little hard hat, and going to go get you some returns. Be like, money, you can't stay up in here. Just like you tell your children, don't run up my light bill unless you want to go to work. That's what you tell your money. You want to be up in my bank account? Listen, money, you got to go to work. When your money goes to work, guess what? It comes back with interest. All right? It should come back with interest. And the great thing about SPY is it's going to be returning to you, at least if past market performance is an indicator of future market performance, right? Because we're doing our research on every exchange traded fund. If it's returning on average 15%, that means in 10 years, your money would have worked hard for you and brought you back $15,000. That's without you going to your 9 to 5, right? That's without you going to your hourly job. That's without you trying to sell some Mary Kay lipstick with a piece of cantaloupe on a toothpick. Shoot. Now let's say you took that same $600 and your $100 a month, and you just put it underneath your mattress. Cause yo grandma said, don't trust that old Robin Hood, baby. Don't trust that E-Trade, baby. That's what white people do. Us black folks, we just pick up the mattress and we just put the money underneath there and you just sleep tight. Just put all your weight on the mattress. You put it in the right place, can't nobody pick it up, honey, because I gave you them ham hocks to eat. Okay, I gave you chicken nuggets. Listen, you put all that money underneath the bed, in 10 years you have $12,600. Now, for those people who are on the live and I haven't seen it yet, right? I haven't seen it yet. Is that, oh, well, you know, $28,000 doesn't seem like a lot of money. Okay. Neither does 12,600. It seems like more than that. Now, the market will fluctuate. You can't guarantee that it's going to be 15% every single year, and that's why you go and you read the prospectus and you see how it's performed over the past 5 years. Just like analysts could not have predicted this black swan event, which happened last year, right, and continues to happen this year, COVID, right? They can't anticipate what's going to happen in 2027, 2030, but that's why I said 1 year might be 13%, the next year might be 7%, the next year might be 20%, and all averaged out consistently, at least for the past 5 years, it's been 15%. But guess what? Even if it's 10%, even if it's 6%, it's higher than storing your money on a mattress. Now, some of y'all might say, well, I'll just put it in a savings account at my credit union, because the way my credit union is set up, they give me 1 to 2%, girl. And guess what my credit union is not doing? It's not doing what Tesla's doing. You know, Tesla be $200 at 2 p.m., 4 p.m., that joint be $800. And you be like, hold up, what? You know, fluctuating all over the place. But the credit union is stable. Miss Martha, she been working there 40 years. Because she take her vitamins, she gonna be there 41 years, 40 more years. 1 to 2% interest. I'm not saying you shouldn't save. I'm not saying you shouldn't pay off your debt. But if you took that same $600 and you put it in an interest-bearing savings account, always make sure you have 6 months worth of interest, 6 months worth of savings before you invest. But if you took that same money, you put it in a savings account, and it grew at 1 to 2% when you invested $100 per month for 10 years, that investment will be worth $13,999. So I wanted to do that comparison because I want you to see why wealth-minded people are responsible, right, with their money. They make sure they get rid of bad debt. Make sure that if they're going to take on debt, it's good debt, right? They're investing in assets that produce positive cash flow. They make sure they have 6 months to a year worth of savings. Sometimes it's 3 to 6 months. That's your business. And then they take their money off the sidelines. They say, Grandma, I love you. I got to take this money underneath the mattress. Move. I love you. Move over. Go sit in a rocking chair, right? They put a little money in the savings account. That's the 3 to 6 months. That's coming back 1 to 2%. And then they say the money that they can afford to risk in a calculated way, because we're not being reckless. That's why we're diversifying our investments with the 3 ETFs that I mentioned. You're going to put that money to work in an ETF, right? And anticipate higher returns than 0 and 1 and 2. Make sense? So that's what I would recommend that you do with your 600. And we have finally gotten to the last half, y'all. I'll be talking to y'all all night. I love talking to y'all. Y'all real. Y'all some good company, okay? So, let's go ahead. We're going to talk about the last thing that you can do for your children, all right? Oh, someone's asked me about brokerage accounts. Brokerage accounts, I always recommend you open 3. You open 3 because different brokerage accounts offer different benefits. The 3 that I have E-Trade. E-Trade allows for me to buy equities. It allows for me to buy mutual funds, index funds, exchange-traded funds, but it also allows for me to trade on the OTC markets. We don't have time to talk about that tonight, but that's the over-the-counter markets. You have a lot of cryptocurrency there. You have a lot of penny stocks there. You can buy a lot of cannabis stocks there, okay? I also have an account with Fidelity. That's where I have my IRAs, my individual retirement accounts, traditional, Roth, okay? So I'm also able to open a brokerage account there. You can open custodial IRAs, which we'll talk about in a second for your kids, Fidelity account. And then I also do have Robinhood. Robinhood is another brokerage account that I have and I own, and I'm actively trading there. Trade just means that I buy stocks in Robinhood, I sell them in Robinhood. So I have 3 brokerage accounts, okay? I use each of them for different reasons.
Y'all have a good night. Thank you so much for your time. Look forward to seeing you tomorrow. Bye-bye.